Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have Doug Dyment, the CEO of Gatekeeper Systems. Gatekeeper Systems trades on the TSX Venture Exchange under the symbol GSI and on the OTC under symbol GKPRF. The company is trading at 85 cents with roughly 90 million shares outstanding, or about a $75 million market cap. I'd now like to hand it over to Paul Andriella.
Thanks, Trevor. Yes, happy to have Doug Dyment with us from Gatekeeper. We go back a fair while. I've known about Gatekeeper for several years now, and yeah, definitely happy to have Doug on board. Doug, great to have you here today. And like we always like to start, want to have you make an introduction and tell us what you can about Gatekeeper.
All right, Paul, Trevor, thank you for inviting me on, and I'll start with a happy to be here. Happy to give a brief history as well as a current status of the business. I'll start with a brief history. Maybe this will be good for some people that don't necessarily know a lot about Gatekeeper, and it'll be helpful maybe for some of the some of the people that are the investors that are a little bit more familiar. But brief history, 4 points. Number one, Gatekeeper is established technology provider for the transportation verticals with over 3,500 customers. Number two, we recently landed as 6th largest transit agency in the U.S. SEPTA. For those who don't know who SEPTA is, it's a Southeast Pennsylvania Transit Authority. It's really opened a large transit market, including rail and electric buses for Gatekeeper. Arguably, SEPTA is, the most progressive transit agency in the country. They manage approximately 28,000 cameras. They were spending about $40 million a year on legal fees, largely for false liability claims. Video is a critical piece of their operation infrastructure. And because of a proactive evidence management strategy that they implemented, they're saving about $22 million a year, and they've reduced that cost down to under $20 million. So again, video is a key piece to their to what makes that work. But it really takes a small army of people to find, collect, and manage that evidence. So Gatekeeper was chosen because of our end-to-end solution for trains and buses. It includes software analytics, which really support the SEPTA operation goals. Easy to use software, it's efficient, it supports their evidence collection, and really all SEPTA departments now, including their law enforcement group, really love our software, which is really important. In addition to that, we were chosen because of our system, including crash-worthy storage, or what most people refer to as a black box that meets the NTSB requirements for video, securing video in the event of a crash. And, this is a fantastic opportunity, and we're leveraging it, throughout the entire market. 3, our revenue, 17 million, trailing 4 quarters. Profitable, we're showing about $1.6 million in profit during those 4 quarters. Our goal is of course, to grow the top line, but also show, significant bottom line profit, to profit stability, to ensure investors, that obviously this microcap is concerned and executing on kind of non-dilutive type measures. 4, we've introduced a PaaS system or business model. It's really our platform as a service. I'm going to talk a little bit more about that. So transitioning to our current status, we've got approximately 28,000 connected devices installed, allowing us to offer, future hosted services such as parent apps. Parent apps are really used for real-time notification of where the bus is so they can track where their children are. Temperature checks, that's something new. I'm going to talk a little bit more about that. And video management and video enforcement, using our AI platform. All devices are connected to a smart city. So why is this important? Well, one reason is the George Floyd incident. It was a significant catalyst. for showing the power of video as evidence to protect the public. So that's one reason. Gatekeeper software is a powerful analytic tool that gives our customers the capability to manage incidents and evidence more efficiently. Another example of why connected devices to smart city is important is video enforcement, lane infraction for the efficient movement of people in urban areas. This is a big issue. We recently completed a POC, or proof of concept, with a major transit authority. I haven't named them publicly yet, but they are one of the largest transit agencies out, in North America. And they're using our analytics to determine when a vehicle, violates city bylaws in and around their trains, which puts passengers' life at risk. And what they want to do is they want to be able to, determine when that problem occurred and use our AI to issue a ticket. Another example would be, SEPTA recently putting out an EOI, or an expression of interest, for lane infraction. They've got about a $90 million a year problem with parking violations, and they're looking to explore using AI, to solve that particular problem. So really, it's about identifying when a traffic violation occurs and issuing a ticket. All right. In my view, this is, given that we're SEPTA's, technology provider now, this is really our business to lose. So I'm pretty excited about that. So another example of PASS is our ITIS system, just recently introduced. Stands for Intelligent Temperature Sensing System. It's designed with an analytics backbone and facial recognition. And for those of you that might not be aware, this is with schools, going back, there's new staff that are being hired to take these temperature checks manually of kids, entering the bus. And the cost of that is typically $1,800, per month per bus. With the ITIS system, there's a payback in really 1 month. So the ROI is beautiful, and it's an elegant solution. So we're starting to get orders on that. I made the decision to move into what I believe is going to be a new and growing area called health surveillance. I see that being, similar to a similar market to really when the Homeland Security and Defense market, was created back in 2001 to 2003. This is a new area. And, and we are in a great position to take advantage of, this new market as it starts to grow in the transportation sector. So further to that, we recently announced above market financing of $1 with a $1.10 warrant. It was unsolicited, approximately 58% premium to the market. We're seeing that our U.S. ticker volume is equal to the Canadian side, and our story is rapidly becoming a U.S. story. And a re-rating is just starting. So there's a lot of activity going on, in our business. The Q1 is quite robust, here. So we're looking forward to another, successful year in 2020-21. So with that, I will, I'm open to any questions.
Thanks, Doug. Let's categorize the different products you have, because you mentioned a number of different things there. Everything from I remember you when we first got involved that you're really selling a video camera product. You've obviously grown from there, but let's spend a little bit more time on the specific product. So video, all the way to the heat sensing product.
Yeah, sure. Yeah, you're absolutely right, Paul. Like when we first met, Gatekeeper was really a one market company, if you will, with a limited number of products specific to that market. So, for instance, inside the school bus, we would have recorders that would be able to handle maybe 4, 6, or 8 cameras. and integrated GPS and vehicle sensors with voice. And then we were just starting to introduce at the time our school bus stop arm camera system. So since then, our product line has really evolved significantly. So we're able to, I'm a big believer in analytics. I'm a big believer in getting more intelligent out on the edge. So we focused on, a 360 solution so that we can stitch video on the outside of vehicles now. And deliver that information back to the driver. So when a driver is in a tight spot and there's some blind spot areas, they're able to see what's happening there, which provides an extra layer of safety. Recently we won a military contract at Dover Air Force Base, which they're using on their buses to transport their staff, back and forth to the runways. So this particular system, it's starting to grow in not only the K-12 market, but it's got applications in municipalities. Because we're strong in the Philadelphia area, we got to focus on the city of Philadelphia. And they're starting to get ready to test our systems on, they got about 16,000 vehicles, and they got a whole bunch of different types of vehicles, from garbage trucks to sanitary trucks to just a number of vehicles. So the 360 system is it's an overall solution that when we first met, we hadn't introduced that, Paul. So that opens up some new opportunities, on the city side as well as transit. We also introduced, train products. Our business with SEPTA has really given us the opportunity to move into the train market. And for investors that don't really understand the transit market, they might think of transit as being just buses and maybe subways. But if companies like Gatekeeper are going to offer specific product solutions for the transit market, the train area is really it's a niche within the transit market, and there's some specific requirements required there, at times by NTSB, such as this black box technology, in addition to meeting, other requirements specific to trains. So we've had to introduce, a line of products specifically to the train market. And so it's really driven, it's driven a wider product, product area for us, I suppose, on the hardware solutions with the cameras. Now, on the software side of things, we're introducing, more software applications. We've got our video enforcement software that was traditionally used in a school bus application. We're still moving forward with our stop arm camera business. It wasn't growing as fast as I would have liked, so I've moved into some other areas. But we see that that application being useful in other areas in transit for lane infraction. So I've always seen that, but it's now starting to heat up a little bit, which has really forced us to widen our product line. So if you think of Gatekeeper and our product strategy, really we've got a platform type strategy on the hardware side that allows us to collect any types of information on video integrated with other forms of data, and then marry that to multiple software applications. In the near future here, you're gonna hear more about more software products coming that allow us to really leverage the data. That's where I'm a big believer that the monetary value for Gatekeeper is going to be, is we plan to offer up more hosted software applications that allow us to leverage the data that these 28,000 connected devices are collecting every day.
Perfect. Okay, so you've grown your business from, I remember in the day, about $3 or $4 million a year in revenue, up to about 17 million right now. How big is this opportunity you guys are chasing with the different categories of products?
Well, I mean, I suppose I could give you the Doug Dyment blue sky on valuation. I mean, I want to grow $1 billion valuation. That's my goal, right? And if you look at some of the valuations in the U.S. market with some of these AI companies that don't necessarily have what we've got, even at the moment, they're valued significantly higher than we are. So. This year, if you read our press releases, you can probably, figure out pretty quickly that we're going to be somewhere between 18 and 20 million top line. I want to prove to the market that we can not only be a company that grows the top line, but we can grow the bottom line and significantly grow this bottom line, right? So that's a goal I've got. How big is the opportunity? I see us, kind of the next level for us being somewhere between, 23 and maybe 30 million. This year is going to be interesting. What we've got in our sales funnel at the moment, it depends on the timing of, the landing of some of these contracts. I'm going to use ITIS as an example here, Paul, because 12 months ago, if you would have said to me, Doug, are you going to be introducing a temperature sensor, in the next 12 months, I would have said, what are you talking about? So, we need to be a company that is flexible and be able to react to, certain things that happen. Health surveillance is a great example. This ITIS system has enormous capability. At the moment, it's a panel that's got built-in, AI to, to determine temperature, but I really see a big opportunity in case tracing in the transit, industry. So I see us growing somewhere between, maybe 25 and 40 million, and then scaling up from there.
And so you're morphing away from just hardware, you're getting into software and data analytics, and sort of the semi-SaaS type of product. What's that doing to your margins? Obviously hardware, traditionally, if it's not niche hardware, margins are, tend to sort of get squeezed. But obviously the more data and more soft services you provide, the better the margins. But give us a sense of where they are and where you think they could go.
Yeah, absolutely. So I'm a believer that hardware is always a race to the bottom if that's all you're selling. So Gatekeeper is, as it relates to gross margin. So Gatekeeper is we've in the past, and still for the majority of our business at the moment, we bundle our software, with our overall solution for particular, to solve particular problems. That's what we do, and then we take a gross margin with that blended software. I'd also like to point out that what's happened, with the, with our gross margin being under pressure, because of the trade war. The light has been kind of off the trade war, because of COVID and a lot of the other political issues that are going on in the U.S., right? But that's still an issue. So we found a way to get our company profitable, even with some of the reduced margins that we've got on the hardware. Now, when you compare our services business, as I call it, we are typically, around a 60% gross margin on our services business at our Philadelphia contract, right? So what a lot of people don't realize is that, that new contract that we won, which totals around $12 million over 5 years with SEPTA, it's roughly, at the moment anyway, about $2.3 million a year in recurring revenue. That is using our software on their servers, and we're transitioning from having people, techs going on the vehicles and trains to check video to really being a remote type of monitoring type situation. So when you compare, say, the services business, because that's really how I break this down. I look at us as we got hardware type sales at the moment. We've got services business, and those hardware sales are around, reduction with the trade war has been around 41, 43%. Then you got our services business that is around, say, 60% gross margin. You know, and then there's the coming software side of our business, which I believe, will be upwards around 70 to even, larger gross margin than that. So the thing I'm really excited about with some of these software products that we have coming to manage the existing data that we're collecting is we don't necessarily have the big costs to, initial costs to bring on new customers, right? Because we're already, we've already got those customers in place. And really that's what this PaaS model is all about, platform as a service, is looking to leverage each customer, with more and more revenue and higher margin with the coming software, data management applications.
So it leads to another question. Roughly $17 million you're doing in revenue right now. How much can you say is recurring SaaS type of revenue or data revenue, and how much is hardware sales?
So this year, and I know what the top line is going to be. So we are, I got to be careful how I answer this, otherwise I'm going to give away the top line, right? But because you know what the contract is. So we're going to be somewhere between, I'd say, 8 and 13% of our revenue. This past year will be recurring services type revenue, right? So now on the SaaS, now that would be considered, kind of a traditional SaaS, model, because the way I define, services revenue is really long-term contracts, right? Long-term recurring revenue contracts, not necessarily a services, installation type contract, right? So it's really longer term, kind of 3 to 5 year contracts, right? Where the monthly recurring revenue is rock solid. So we'll be somewhere between, 8 and 13%, which is really up from the year before of maybe around 3 or 4%. So we see that side of the business definitely growing. I want to over the next, say, 3 to 4 years, I'd like to see Gatekeeper's, Gatekeeper's mix be more of a 50-50%, 50% recurring revenue, and I don't want to lose that. Well, first of all, I can't control whether or not it's all going to be, SaaS-based or kind of a fixed revenue, if you will, on a system side, because some of our government contracts, their capital budgets are, they're not going to change to a SaaS model. So there has been some companies that have, they've forced things down their customers' throats, and they've lost customers because of that. Our contracts are so significant that I don't want to do that, right? Like for instance, SEPTA has already announced that they're going to be spending in the neighborhood of $30 to $35 million in video system upgrades, right? In the next 5 years. And, so we have a pretty good idea what they're going to spend this year. And, so that's not going to be a traditional SaaS model. We can't control that. So, and we don't want to, we don't want to let go of 20 or 30 million. So we're going to, we feel comfortable we'll be, winning that contract, right? So I see it kind of being a 50-50 moving forward, once we introduce more software applications.
What's the competitive landscape look like? You guys are, a small company out of Abbotsford, BC. Most people in North America won't know where that is, but who are you competing against, and how sort of vigorous is the competitive fight here?
Yeah, this is interesting because in each of the verticals you can find, different competitors. I find that, that the landscape the landscape is kind of fragmented. It's and it really opens up, interesting opportunities, you know. So I'm so happy that our valuation is starting to grow, and we're starting to get noticed by the U.S., you know, the U.S. capital markets, because it allows us to, you know, kind of look at things a little differently. For instance, on the competitor side, there's opportunity to roll things up, right, and acquire, you know, maybe market share where maybe we're struggling a little bit, right? That'd be number one. Number two, there's a number of different, you know, there's a number of different add-on companies in these fragmented spaces that are software related that could speed us to market. You know, they're small. It's the opportunity would be similar to what Constellation Software has done. You know, they got a $30 billion valuation, and they've been, you know, they buy 400 some companies, all of which are small recurring revenue companies. You know, so there's that opportunity as well within the niches. You know, so what I find is that the, you know, there's different, you know, competitors in each niche. Some of the competitors will cross over into different niches. Most of the competitors are relatively small as it you know, compares to, say, microcaps. And then you've got some, you know, some interesting larger companies that are more on the systems integration side. So, for instance, when we won the SEPTA contract, Johnson Controls kind of looked at us as a bit of a, well, quite frankly, they thought we were a joke. You know, they didn't take us too seriously, right? You know, so they were a competitor, and they could have been an alliance partner. They chose to compete against us, and ultimately, and you'll remember this, Paul, we did that $4.2 million financing in 2017, and that really helped to increase our balance sheet, which we needed to help us, you know, show SEPTA that we were a stable company financially, because from a technical standpoint, we checked all the boxes, we executed, you know. So I don't necessarily get too concerned anymore about those larger competitors, because I just find in our niches, we just need our fair share of the business. And I think that with some of these accounts that we're winning and the growth in our business, we become a potential takeout partner for some of those some of those companies that have lost to us, right? And you know, so I'm pretty excited about that. You know, I'll use Motorola as maybe an example. I love Motorola because they're a by the way, we're you know, we're working with one of the largest Motorola dealers in the country. We haven't got a signed agreement yet with them, but Motorola is an exciting company to me because I come from the security industry from back in the 90s, and Vigilon built a great company that was acquired for over $1 billion by Motorola. So they're in the security business, but Motorola has a lot of niche markets in mobile, and it makes a wonderful partner for us, especially with this new IDIS system that we have. You know, and they would be you know, they could be an example of a competitor in some cases, but an alliance partner in others. You know, so it's a fine line between an alliance partner and a competitor. You know, but I guess from a high level, you know, Paul, there's competitors in every market, but just some of them are, like I say, they're alliance partners, potential alliance partners, right? And I like to think of most competitors, especially on the larger companies, such as the Johnson Controls and the Motorola's, as an alliance partners. Now, with the increase in I don't know why this is, but I just find it interesting with the increase in our market cap. The phone's ringing more by these larger companies now. They're just looking at us differently, which I find quite exciting.
Yeah, for sure. Well, okay, so if somebody were to just really think about Gatekeeper, like how do you describe it, or how do you, because you're now morphing into a few different product lines, what makes you guys unique? What's your secret sauce?
Well, the secret sauce on the technology side is how we look at our software applications. Like we have multiple software applications that do multiple things, but what we try to do is we try to make our customers' lives, or at least managing video easier for them. So that's really what makes Gatekeeper, different. Yes, we have end-to-end solutions, and yes, we have hardware that is part of that those end-to-end solutions. You typically need hardware at some point in time, in a solution, to make the in order for the overall solution to work, which includes software. But that's the differentiator is really the software application. So that's number one. Number two, a big area that a lot of companies miss, and so do investors, right, is how does this company treat their customers? What kind of service systems do they have, and can they deliver? Can they execute? That is just as important as the technology, right? And that is something that Gatekeeper does very, very well on the IT side. If you can, we won that SEPTA contract not just because our technology and our software and our analytics. I mean, that would have been great, right? That was certainly a check in the box for us. But if we couldn't deliver the video that they needed in a mobile application over the IT network, we would have fallen on our face. So we're a company that has the background on the technology and the IT side to be able to deliver what our customers need. So that whole service side, it's very, very important to the success of Gatekeeper moving forward. And we pay attention to the operations. It's critical, right? So those are two key areas, right? Is the software with the built-in analytics and our ability to deliver and execute because of our level of expertise in mobile IT systems.
So and maybe you just answered this question, but for a couple of years there, you were sort of your revenues were kind of call it stuck between 4 and 8 million, 4 and 8 million. What was the catalyst, or what changed in this past year to really launch the kind of growth you guys are seeing right now? Was it a specific product? Was it a specific contract? Was it usually there's something that causes that? And then the next question, I guess, is what makes you confident that it'll continue?
Yeah, so those are great questions, right? And one of the things that people don't see on the operations side is what is actually happening fundamentally in the business. And sometimes that can take a year, 2 years, 3 years to really start to see the results in the income statement, right, in the balance sheet, right? So those years that you're talking about where we had a spike in 2016, I guess it was, of almost just under 10 million in revenue, but we were still a one market company with minimal products, right? And we had a spike up because of some of the large wireless projects. And, and then the next year we ended up losing some contracts. There were some contracts that went on hold, and that kind of affected our revenue, for a couple of years, where we kind of leveled off about 7.5 to, the 8 million or just under 8 million. But I was building fundamentally some new products and new markets that were going to be part of this PaaS platform. This platform as a service strategy. And really that PaaS model has been one of the catalysts that gives me the confidence that we can see the growth. So, landing SEPTA really helped. There's no doubt about that, right? And I spend a significant amount of time on the strategy side to get that done. And really SEPTA is an interesting, account because it's really like its own market. It has the potential this year to be, half of our revenue, right? So that's quite interesting. But it's not just about 1 or 2 contracts there, because we are a local partner, or community partner. They throw a lot of different revenue projects at us, so we need, that's something that gives me the confidence that, that we're going to continue this growth. Now, another confidence builder is the fact that because we have SEPTA, there's other agencies that we're now talking to, right? And those agencies do take some time to crack into, but if you do things right, and which we are doing, you know, it's got wonderful potential for long-term growth, right? So that's the transit side, and and K-12, we're adding more capability, right? This ITIS system has the potential to have us moving into fixed site, surveillance market, or fixed site health market, if you will. There's more products that we have that are opening up more channels, and we're taking it one step at a time, and the revenue's starting to come in. It's just giving me more and more confidence that we are, that we're going to be, north of where we're at this year. So, it's interesting, Paul, because once companies, get wind in their sails, if they've got the right product mix and they've got the right customers and they're in the right space, then you can see scalability, right? In the past, I thought that the stop arm camera business was going to be the blue sky for us, right? And I felt like the wireless systems and the high definition products for the school bus market was going to grow at a certain rate. And it did grow a little bit, but the stop arm camera business for us didn't grow at the rate I thought it was going to, so that caused a little bit of a pullback on our top line revenue projections anyway. But we backfilled, and we're set up, fundamentally with, a wider range of products now, more software applications coming. I've got my eye on, acquisitions. So I'm pretty darn confident that, that this was the leverage point, that we were looking for, say, 3 years ago. Right?
Perfect. Let's take it a little bit sort of to current times right now. Obviously COVID is having an impact on a lot of businesses. Operationally, how has that affected your business? And obviously with some of your new products, there's an upside to, handling or dealing with the pandemic. So yeah, again, operationally, how's it affected your business? And then tell us what the potential upside is from these new products.
Yeah. So COVID, operationally, so I'll say this about annual budgeting. I think that we are. I think the annual budget is basically, for a lot of companies, is going to be dead, right? It's like, if you can't be nimble and you can't move fast on on your budgeting process, then you're going to be in trouble, and that's what we did. I think that the training that I've had, at Gatekeeper as a CEO and founder, from an operations side, and gone through some pretty tough times, has given me the tools I needed to direct this team during a really tough environment, right? And we've seen it coming. We reacted quickly. We adjusted our budget, and fortunate for us, we had an account that gave us essential status in transportation that allowed us to continue shipping product. So we actually seen growth in at a time when most people were not, they just didn't see any growth, or they were losing business. So we're also fortunate enough, I suppose, to have an engineering team that's nimble, that when directed, they buy into the vision of the CEO pretty darn quickly, because we've been together so long that they know that when I gave the directive to move into the health surveillance business and take some of the current priorities off the table because of changing market conditions, they bought in 100%. And thank goodness they did, because we were able to execute on a system that within a very short period of time, we're already generating revenue. Again, I believe in health surveillance. I get a few questions from investors saying, hey, when this COVID goes away, when the vaccine comes out and the COVID, and this goes away, that market isn't going to be there. I don't believe that for an instant. These school districts, health surveillance is around it's a new market, in my opinion. you know, so I believe that there's going to be significant upside there for us, Paul. You know, you know, school districts are moving to putting infrastructure in place right now, and because of how we get access globally now to information in an instant, you know, parents, as an example, are going to be concerned about, you know, pandemic. COVID is going to go away. I totally agree with that. But this threat of pandemic is here to stay. And, you know, there'll be another one coming, you know, so taking temperature is, I believe in North America, is going to be as common as it is in China. You know, they've been doing it there for, you know, for years at the airport, you know, so I just think that that's going to be a growth area for us. You know, on top of that, there's going to be issues, you know, in these urban areas and cities, you know, in transportation. I think lane infraction and AI is going to be, you know, a big growth area. This whole area, you know, of, you know, collecting video as evidence, it's just going to become more and more intense, and it's becoming more and more important because of, you know, the issues that are going on, you know, in the U.S. You know, Floyd was only one. There's plenty other of issues, you know, so I just think that we are in the right space at the right time. Having essential status has been wonderful for us and our shareholders. And, you know, we've been able to grow the top line and the bottom line. That's got the attention of the U.S., you know, you know, the U.S. Capital markets. We are still an undiscovered company. And this latest financing, you know, that I announced, you know, it's an example of us just being discovered by, you know, groups that are that want to come in and see value at $1 and $1.10 warrant, a tight warrant, right? You know, so that's good. You know.
Well, you know,
yeah.
Let's talk a little bit about that sort of stuff. So, so you raised, was it 5 million that I think was upsized to 6 million, if I'm not mistaken? Is that correct?
That's correct. Yeah.
Okay. So, A, what are you going to do with the cash? I guess, no, let's say A, who does that? Like, what kind of strategic investor comes and does that, which is pretty rare. I think last time I talked to you, it said, you know, congratulations, because that's, you know, that's almost never seen in the markets to see that kind of premium. So that's obviously a testament to what they think the upside is. But secondly, what do you do with that cash now?
Well, first of all, I haven't made any kind of comments to the public market about who it is, right? Mm-hmm. But I can tell you this, that you know, there's certainly speculation that you know, that this financing is being done by, you know, maybe a potential, you know, group that sees an acquisition, you know, and you know, and a dollar is pretty cheap. You know, I think the $1.10, you know, certainly make that tight warrant certainly makes it, you know, more attractive, and it's certainly attractive to Gatekeeper, right? You know, and it was something that I really couldn't say no to. I was saying no to a 60-cent financing, you know, but I couldn't say no to that offer, you know. So obviously, the people that are, you know, that are coming into this at this level, they see with what Gatekeeper has, and they've done a lot of due diligence on us. I can tell you that. They know a lot about our customers. They know a lot about our markets. You know, they see this as cheap, right? You know, so, you know, so I'm extremely, you know, I suppose, excited and bullish about what's, you know, what we're executing on, you know, there. Where do we use the money? Mm-hmm. Well, I hadn't planned on an additional, you know, 6 million coming in, but I'm quite happy to, you know, to take that cash in, and quite frankly, you never really know how new products are going to be received, but really that 6 million gives us a bit of a buffer, you know. I don't plan on. You know, I'm the type of CEO, I think you know me well enough, Paul, to know that I'm not going to spend money stupidly. Mm-hmm. You know, I'm definitely going to be using that money to accelerate, you know, some key hires. as well as push out national campaigns on these current new products that we have coming in. That's where the new money is going to be spent. And even if we didn't bring on a new financing, Gatekeeper's still sitting with about $8 million in working capital. We've really done a great job in growing that working capital, right? And I was able to do that by bringing in, a bank financing. And by the way, at a time when, right in the middle of a COVID environment, right? So those Canadian banks, as you well know, are very difficult to do business with, right? Especially in this environment. So they believe in our ability to stay profitable, so that has certainly helped for inventory buildup. And we've also got strong partners overseas that are also giving us inventory facilities without GSAs. So I've negotiated those. So from a finance standpoint, Gatekeeper actually has working capital or access to financing for inventory of approximately $5 million, right? $3 million for the banks and a couple of million for from our suppliers. And then we got access to, now we've got working capital of say 8 million, no debt. And now with the potential financing coming on brings us to, almost 15 million. So I don't see that allowing me to do really any kind of aggressive acquisitions, because 6 million is not a lot to really do acquisition, at least some of the ones I'm looking at. It's really will be used for, pushing out our organic growth model, right? And really, just strengthening the organic growth model in the business.
Gotcha. We've covered a lot today so far. I just want to remind everybody, if you've got any questions that you want me to ask Doug, use your chat function and type out a question, and I'll be sure to ask Doug. Doug, we talked about, okay, so now you're potentially going to get some cash to grow organically. We can look forward and say, okay, the product, the R&D spend is going to go towards products in a certain direction. Is it, are you looking for products that are going to be collecting more data? Are you looking for specific niches that you're not, in right now? What sort of direction do you want to take your R&D and product innovation?
Yeah, good question. So our focus on, in the moment, especially with this current environment, it's really focused on our current customer base, right? We have a lot of customers and there's a lot of hidden value there. So what we're in the process of doing is monetizing the data from the devices that are already out. That's the first phase of this, right? So we're busy getting ready to launch new software applications that give us recurring revenue, from these customers that are already bought our systems. That's number one priority. And by the way, that could take us to the whole new, next level, especially, with this health surveillance market, starting to show the significant growth potential, so that's number one. The other area, we're looking at is adding specific features to those products that we are even already have developed that open up new markets. And my experience with open up new markets, Paul, has been that you got to be really careful that you don't stretch the company too thin and you get offside with the timing of the revenue coming in. Excuse me. So we got to be mindful of that, and because I've certainly experienced that in the past, right, where we thought the market was going to move quickly, and we spent a significant amount of money chasing it. We seem to be in a position now, which I absolutely love, is that things are coming at us as opposed to us chasing, right? And that's so we should be able to see our revenue grow, somewhere from where we're at now at 17 million, trailing 12 months revenue to, 40 or 50 million by leveraging what we've already done, over the last, call it, 10 years, if you will, from a public to a private company. And I think that's a big benefit that the shareholders get, right? Is that Gatekeeper has been around for a while, and now we're starting to leverage, different products onto our existing product suites to, with a focus to add SaaS type, revenue, right? So our maintenance align, call it maintenance align activity on our hardware. That's certainly going on, but the new development is going to be on new software applications, and we're already close to bringing some of those to market. We're actually in test, with some big customers, in the U.S. So you're going to start to see, some of that coming in the, even in this fiscal, right?
Right. So listen, we've got a question here from one of our listeners. Company Axon in the U.S., provider of body cams. Obviously, there's a lot of noise around that, and with the issues that we've seen on television the last little while. I believe you guys were somewhat involved in that before, but refresh my memory. If not, is there an interest in getting into that market?
Yeah, so you're absolutely correct that, it was about in 2016, I guess, 16, 17, when the stop arm camera business wasn't moving as quickly as I would have liked. There was a new growing market in the body camera business. So we designed we architected, I should say, a evidence management system. And we got shortlisted in Cleveland. We got shortlisted in Toronto. It looked quite exciting. Then what happened was, I think our business this might have been in 2000, maybe 15. It happened in and around the time that our business in the school bus market with wireless and high definition took off, and our product line wasn't mature enough in the law enforcement business to really compete against an Axon, which used to be Taser. So there was just too big a companies in there that had too big a market share for us to go in and compete. So I decided that we needed a laser focus and not chase that market and stay focused on, the school bus K-12 market, and go after SEPTA. So will we move into the body camera business in the future? I don't have any plans to do that, to be quite honest with you, at this particular time, given everything that is going on in the business. I think that would be a big mistake.
Mm-hmm. Now, I've seen a lot of takeouts in this industry, and we've seen a few in the last couple of years. What do you, as a founder and significant shareholder, what do you see as the exit strategy for Gatekeeper, if any?
I'll answer it this way, because I had I've got some people around me, Paul, that are good business advisors, and so there was talk about acquisition and this sort of thing, and I think that I think an exit strategy for an exit strategy for investors is really Gatekeeper just executing on our fundamental strategy here and growing our company and growing that stock price, right? That's one thing. And for the people that have believed in this story, and believed in us, they've done very well, right? Over the last 14 months. And some people have believed in it, but just had to get out for different reasons, right? I understand that, but do I think that we're going to get taken out? I'll be surprised if we don't. It's just kind of the natural way that things work. Am I going after companies and soliciting that? Absolutely not. What I want to do is I want to build something that's so attractive for somebody to that they just got to have us, right? And you do that by ownership and accounts, building brand, having multiple hits on target, not being a one horse pony sort of thing where we've got multiple products that have multiple revenue channels in each of our customers with the potential to scale, right? To scale into other markets. And you might have companies that have come along and say, you know what, we're strong in this market, this market, and this market. Gatekeeper's got product line that can scale in that market, but they don't have the necessarily horsepower to go there yet, right? Mm-hmm. So, that might make a good acquisition. So I'm building a company that is attractive for an acquisition, but I'm not going out and aggressively, targeting those individuals quite yet.
Doug, we've covered.
I hope I answered your question there.
You did, yeah, you did. We've covered a lot. I mean, we've gotten a great update here. Certainly, we've seen some tremendous growth over the last couple of years. You've executed on your plan. You've got some new products that looks like should lead to a pretty exciting future for you guys. Is there any sort of message you want to leave with the our listeners? Sort of, in the next 6 to 12 months, what can investors expect? And what's the major message you want everybody to leave with today?
Yeah, sure. So why don't I've just got a quick summary here, so which drives a message, right? So Gatekeeper, I'm a believer in and it's taken us time to get here. Believer in building, obviously, the top revenue growth, but we can't forget about profitability, right? I'm driving not just slightly profitable. I want to have a significant, bottom line growth, right? And because I believe I'm still the largest shareholder as the founder, I don't want to see dilution, right? I really don't, so I'm aligned with shareholders in that thinking. The expansion to the U.S. capital markets is giving us a re-rating. That has started. We got a solid business model with large customer base, over 3,500 customers and growing. We're a niche market player, so we want to dominate our niches. That drives a focus in our company. That's attractive for investors. We got approximately $8 million in working capital. That's grown significantly over the last 12 months. That's pre-financing, by the way. So we completed this financing. We'll be upwards of somewhere between 14 and 15 million post-financing. And that allows us to control dilution and build real shareholder value based on fundamentals. I believe in that. We're strong in transportation vertical with the potential to expand into fixed site. That is really quite interesting with this current ITSS system, right? Orders from schools and interest from transit agencies for buses and platforms are already coming in. I hope to have some really interesting news on, on the transit market as it relates to our health solution. The growth areas for Blue Sky really are the current let's just quickly talk about the current video market. I'm a big believer in Blue Sky and the managed services, all part of our PaaS platform strategy. Video enforcement, I see as a big area of growth as well, because a lot of these cities haven't brought this on. New York is testing right now. Toronto is looking at it. Obviously, Philadelphia is. The NTSB black box for accident investigation, that's a whole area that's kind of with COVID has gotten a little bit forgotten, right? In my discussions with, not necessarily forgotten, but just not brought up as much. But I still see that as a big area, and we're in there. And then acquisition side, I see us, growing the company, not just organically, but specifically with some, with some strategic acquisitions that meet the requirement that I'm looking for, right? It's a fragmented market out there, and there's potential for roll-up as well as strategic acquisitions that give us access to areas that we don't currently have access to. All right.
Awesome. Okay, so I'll summarize nicely here. We've got a fantastically growing company. You've done a great job increasing shareholder value and returning value to investors. A lot of interesting new products that I think are in pretty big demand. And yeah, I mean, I think the story is starting to resonate with a lot of both Canadian investors and U.S. investors. So, Doug, congratulations. I think you've done a great job over the last couple of years since we've known each other. Again, the symbol is GSI on the Venture Exchange. Doug, if somebody wants more information, what's your website address?
It's gatekeeper-systems.com.
Perfect.
Gatekeeper-systems.com.
There you go. Great to have you on today with us, Doug. We look forward to the next time we can catch up, and I hope continued success.
Okay, thank you very much.
Perfect. Trevor, I'll hand it back over to you.
Awesome. Thanks for joining us again on the behalf of Small Cap Discoveries, Doug. And as Paul suggested, looking forward to upcoming catalysts and future financials, and we'll be sure to follow up soon.
Okay, Trevor. Thank you very much. All right. Bye now.